captured the world with our culture and tradition. We dawned upon a whole new era in the new millennium, on a remarkable path to become a global economic force. In the last 25 years, we have become a sunrise economy, going strength to strength, building on our dreams. It has taken more than mere brick, mortar and steel to transform our towns, cities, our country and our lives. The journey has just begun. We are proud to be a part of this incredible journey, striding forth to build a nation, partnering with Paradigm Projects, and preserve our heritage. From advising to transacting to managing, we assist in meeting business objectives and creating winning compositions. We provide services across industries and sectors. Locally expert and globally connected. Our team of finest advisors have an astounding capability of servicing clients in every segment across the country, with independent, unbiased, and in-depth market knowledge and research. We envision the spaces of tomorrow, taking corporate India to greater heights, transacting, building, and managing workspaces of tomorrow. From state-of-the-art industrial and warehousing spaces to comfortable and productive offices, we are the partners in property that listen, preserving the human element that is too easily overlooked. We are committed to creating value in all that we do. We are truly connected through our people, history, and culture. A connection built on relationships, trust, and a vast global network. We know what matters because we are more than property. We are a people's business. We are Knight Frank, and our journey in India has only just begun.
Good morning, and it gives me great pleasure to welcome all of you to the launch of our flagship report, India Real Estate, Residential and Office Update for the period July to December 2020. My name is Shishir Baijal, and I am the Chairman and Managing Director of Knight Frank India. Along with me today will be our Executive Director, Mr. Ghulam Zia, who will help me moderate the question-answer session, and presenting the report will be Rajni Sinha, our Chief Economist and Head of Research. A lot has happened it happened in 2020, most of which unprecedented, that changed the way business is done, including in real estate. The first half of the year witnessed a complete standstill of activities due to the forced lockdown, leading most pundits to believe that the already troubled sector was entering another stage of crisis. Now, while the residential sector was already challenged by availability of liquidity issues, lagging demand, and mounting debt, the star performer over a period of 3 or 4 years, the commercial office sector, also saw significant decline in demand in Q2 2020. Work from home, which was a forced business process continuity measure was being touted as the new normal, and many predictions revolved around the concept being a more economical and viable option versus owning or leasing office space. But as fast as it came, things started changing rapidly in the second half of the year. Today, as we embark upon 2021, the market developments in the last few months have stakeholders hopeful of a stronger and more stable growth. Series of announcements made by the government and the Reserve Bank of India pumping liquidity into the economy has led to remarkable resurgence in the real estate market. By quarter 3 of 2020, demand for office occupiers and home buyers started to revive, and by quarter 4, demand recorded performance that far exceeded those achieved in the previous quarters of the year. Resumption of business activities across the country and improvement in sentiments with news coming of the potential vaccines ensured office transaction volumes for the top 8 cities grew by a massive 271% quarter on quarter in quarter 4 2020 and reached an impressive 115% of the pre-COVID level, which is the 2019 quarterly average. This performance actually underscores both the latent demand in the Indian markets and the potential impact of a timely and meaningful push by the government and central bank in a pandemic period, and because of the resilience of its key occupier groups such as information technology, the BFSI sector, and others that stayed on the course of growth. In the residential sector, a significant amount of pent-up demand came to the market during the festive season, and as a result, sales rose a staggering 84% quarter on quarter. The 3 factors that pushed home sales in the second half of the year were, first, home loan interest rates are at a historic low. Second, developers offered a flexible price and payment terms. And third, there was a greater need felt for home ownership as people spent more hours and more time indoors on account of restricted mobility during the pandemic. As we all today in Mumbai, the strongest movement in demand was seen in Mumbai and in the Pune markets due to a limited period 300 basis point cut in stamp duty rates by the Maharashtra government. We believe more demand stimulus measures like this are the need of the hour to refresh the country's housing market to its full potential. As the year starts, we look forward to the new year with cautious optimism and heightened level of preparedness for socio-economic challenges that we faced in 2020. The fundamental changes to the business environment and our experiences of the pandemic will define the way business and real estate markets behave moving forward. We are all hopeful that a more stable economic environment will emerge in 2021 and expect stable growth to resume pace at the earliest. At this stage, I'd like to congratulate the authors of the report, Mr. Vivek Rathi, Mr. Yashwin Bangera, Ms. Divya Grover, Mr. Nibodh Shetty, and Ms. Pradnya Nerkar, all of them having worked in the mentorship of Rajni Sinha, and I think have published an outstanding report. Before I hand over to Rajni, some housekeeping rules that need to be followed for today's webinars are: first, all attendees will be on a listen-only mode. Second, queries will be answered at the end of the presentation. Third, you can either ask your question through chat or by raising your hand. option. And lastly, if for any reason, like lack of time, we are unable to take your question, it is our promise that we will get back to you as soon as possible. With this, I'd like to hand over to Ms. Rajni Sinha, our Chief Economist and Head of Research, to present the report to you. Thank you so much for coming and being a part of the launch. And over to you, Rajni. Thank you.
Thank you, Shishir, and good morning, everyone. I'll be taking you all through the highlights of our India Real Estate H2 2020 report. Before I talk about the real estate sector, a quick look at what happened in the economy to set a backdrop for our discussion on the real estate sector. So Indian economy, if you look at the slide here, the quarterly GDP growth was already slowing down in FY20. And then in FY21, we got hit by the COVID-19 crisis. If you look at the graph, the first quarter GDP in FY21 fell by a sharp 23%. And that was to be expected given that the whole of the economy came to a complete standstill. Subsequently, in the subsequent months and quarters, we have seen economic indicators improving. And if you look at the second quarter, the contraction in GDP was much more muted at around 7%. And the positive part is that now we are expecting that in the third and fourth quarter, GDP is expected to move to the positive territory. And for the full fiscal year, we are still expecting GDP growth to contract by around 7%. And for FY22, on this low base of FY21, we are expecting a positive GDP growth of 9%. Now, a quick look at what has been happening to the high-frequency economic indicators, the monthly economic indicators. So if you look at the table here, I have just listed some economic variables, and the color coding has been done in such a way that the deep red signifies when the data was at its worst in the given time period. And as we move, yellow shows moderate and deep green shows when the data is at its best in this given time period. So as you can see from the table here, for most of the economic parameters, the fiscal year started with most of the variables in deep red. And as you can see in the last 3 months, most of the variables have moved to the green zone, which shows that there has been a rebound happening in the economy, and most of the economic parameters are indicating that. Here, you have to make a note that in the month of November, we are seeing some of the economic growth moderating. And that could be because a lot of growth that we have been seeing in the last few months is because of pent-up demand and festive demand. Hence, the critical aspect would be to see how much of this growth momentum is sustained going forward. But broadly, the expectation is that as the economy moves towards normalcy, economic parameters are expected to maintain the growth momentum. Now, there has been a lot of support from the government and the central bank, which has helped the economy and the real estate sector revive. So here I've just listed below some of the support measures announced by the government and the central bank, specifically for the real estate sector. And as you can see, the repo rate was cut by a good 115 basis points in 2020. And that has brought the housing loan interest rate to a multi-decade low. And that, like Shishir pointed out, is one of the big factors which has been pushing residential sales in the last few months. The RERA timeline was extended, which was a big reprieve for the developers. There was 6 months moratorium on loan repayment announced. There was one-time loan restructuring scheme announced, which was much required at this period. So broadly, the government and central bank, they have come up with a lot of measures to support the economy and the real estate sector. And that's getting reflected in the data, which we'll see going forward. With that, I'll come to the office market. So office market, 2019 was a record year. So the annual transactions were at a very good 60 million square feet in 2019. In the first quarter of 2020, the growth momentum was maintained. However, it's not surprising in the second quarter, the segment got hit by the COVID crisis and the office transactions fell by a sharp 82% Q-on-Q basis. However, subsequently, we have seen improvement in office transactions happening, and in the third quarter, it improved by around 80% compared to the second quarter of 2020. And the big jump has happened in the fourth quarter of 2020, when the office transactions have jumped by a good 270%. And actually, if you look at the quarterly number, the office transaction in the fourth quarter of 2020, it's higher than what was seen in any of the quarters in 2019. And like I mentioned, 2019 in itself was a record year. So basically, quarter 4 2020, the office transactions have broken the record of even 2019, which is a big positive. There was a lot of pre-commitment activities happening in the fourth quarter of 2020. We saw large global tech players starting to relook at their expansion plans in India, which is a big positive for the office segment going forward. Now, if I look at the same data in terms of half-yearly breakup, what happened in 2020, we find that in H1 2020, the office transactions fell by around 48%, and that was mainly because of a very weak Q2, like I spoke about. And then, in the second half of 2020, it has jumped by 29%. And again, that's mainly because of the very good fourth quarter of 2020 that we have seen. If I look at the annual transactions, in 2019, office transactions fell by 35%. But we have to note that this fall is not very sharp given that this was a pandemic year. And we also have to take into account that we are talking about a fall from 2019, which was a record year. So in that sense, I would say that a fall of 35% is not a very bad fall for the office segment. Now, if I look at transactions across the top 8 cities in India, the table here looks at the annual transactions, the half-yearly and the quarterly transactions, the fourth quarter transactions. And as you can see from the table, the annual transactions fell across the top 8 cities, as you can see from the second column. So on a YOY basis, there has been a fall all across, mainly because of the pandemic. And then, in the second half of 2020, the transactions started improving, as you can see from the table. And the big jump has happened in the fourth quarter of 2020, which you can see from the last column in this table, where the Q-on-Q transactions have jumped very sharply for most of the cities. Like say for Bangalore, it has jumped by 460% on a Q-on-Q basis. For Hyderabad, it has jumped by 640%. So broadly, most of the cities saw a very good rebound in the fourth quarter of 2020. With that, I come to the new completions data. The new completions in the second quarter of 2020 saw a dip by 61%, which was again expected given that this was a pandemic year. And there were a lot of supply bottlenecks in the second quarter of 2020. Then in the subsequent quarters, as the supply bottlenecks started easing, we see the completions data improving. So in the third quarter of 2020, it improved by 38% the new completions and then jumped up subsequently by 41% in the fourth quarter of 2020. The new completions, if I look at the annual data, there has been a fall of around 42% in 2020. And overall new completions on an annual basis were around 36 million square feet on the back of 61 million square feet in 2019. But again, this was mainly because of very poor second quarter of 2020, where everything had come to a complete halt. But things have started improving in subsequent quarters, even for new completions. Now, looking at the new completions data city-wise, again, very quickly, if we look at the YOY fall, which is reflected in the second column, the new completions fell all across the top 8 cities. It has subsequently improved in the H2 2020 data, And the big jump again has happened in the fourth quarter of 2020. So with all this volatility and uncertainty in the real estate market, it's interesting to note that office occupiers, if I look at their share in terms of occupancy, it has broadly remained the same in 2020 compared to 2019. So the table here compares H2 2020 to H2 2019. IT, which is the largest occupier, maintained its share at 41%, around the same as last year. Manufacturing, the share increased by a marginal 16%, and BFSI and co-working, the share was around 16% and 10% respectively. Here it's important to note that co-working initially received a big jolt because of the pandemic, as a lot of startups and small entrepreneurs started leaving office space. However, the important thing to note is that the co-working segment has quickly revived back in the third and fourth quarter of 2020, as corporates started looking at the value addition because of the flexibility offered by co-working segment. When we come to the vacancy data, as you can see from the graph here, the office vacancy had been falling consistently from 2012 to 2017 as demand outpaced supply. Now, in 2018 and 19, we saw the vacancy level increasing as increased supply came into the market. And in 2020, which is a pandemic year, the vacancy levels have again increased. So overall vacancy for all India is at 15.5%. Vacancy increased across markets, but the important thing is to note that the important IT markets of Bengaluru, Pune and Hyderabad, the vacancy levels have remained under 10%. And then if I look at some of the other markets, NCR in 2020, the vacancy was 16.3%, Mumbai it was around 20%. So yes, there was a little increase in vacancy in these 8 cities. Now, looking at the rental growth, so the story here goes that rental growth had been increasing across the top 8 cities in India. However, in 2020, the pandemic year, there has been a fall in rentals, and rentals have broadly fallen in the range of around 4 to 7% across most of the top 8 cities. However, again here the important thing to note is that Bengaluru and Hyderabad, the important markets, if I compare the rentals on an annual basis, they have remained stable. They have remained around the same. Even though in the second quarter and third quarter of 2020, there was marginal fall in rentals even in these cities. But yes, the important point to note is that on an annual basis, the rentals have broadly remained stable in these important markets. Now, just to summarize the office segment. So yes, office segment was impacted by the pandemic, specifically in the second quarter of 2020. But the important point to note is the quick resurgence that has happened, specifically in the fourth quarter of 2020. So fourth quarter 2020, the quarterly transactions that we have seen is 15% higher than the quarterly average of 2019. So basically, it has gone higher than the record level that we had achieved in 2019, specifically the fourth quarter of 2020. Overall, yeah, if I look at the annual numbers, the numbers have got impacted by the COVID crisis. But again here, the fall has been less than what was being anticipated few months back. On a quarter-on-quarter basis, there's a big jump of 270% in office transactions. Like I said, large IT tech players have started relooking at the expansion plans of India, which is a big positive for office segment. Another interesting thing we saw is that the data center came to fore in 2020. So data center, which is already looking like a very promising segment, we saw increased activity in the data center segment in 2020 and because of this big jump in digitization that happened specifically in the pandemic year. With that, we come to the residential market. So residential market in the second quarter of 2020, the residential sales fell by 81%. And that was expected. That was when the pandemic was at its peak. People were very unsure about their future income stream, and that got reflected in the residential sales number. And then in the subsequent quarters, we have seen residential sales showing a good rebound. It jumped by 247% in the third quarter of 2020. So this I'm talking about the Q-on-Q number. And then it has jumped by a good 84% in the fourth quarter of 2020. And like Shishir mentioned, there have been various factors which have supported this resurgence in residential demand. One was this pent-up demand, festive demand, interest rates at a multi-decade low, prices falling, developers giving a lot of flexibility in payment options. So all these factors together contributed to this big jump in residential sales. And to that, I will add the state government support provided, like in the case of Maharashtra, the stamp duty cut which was done, which gave a big boost to residential sales, specifically in the fourth quarter of 2020. I'll talk more about that later in the subsequent slides. Now, if I look at the residential sales in terms of H1 and H2, then it was a story of two halves. Residential sales fell by around 49% in H1 2020 because of bad Q2 2020. And then there was a resurgence by around 60% compared to H1 2020 as things started improving and people got a little more comfortable about their future income streams. But yes, if I look at the data on an annual basis, there has been a fall in residential sales by around 37% in 2020 compared to 2019. However, this fall, the expectation was that this fall would have been much sharper, if not for the sharp rebound that we saw in the second half of 2020. Now, looking at the city-wise breakup of residential sales, we find that on an annual basis, if I compare YOY for 2020, residential sales fell across the top 8 cities. However, the improvement can be seen from H2 2020 when we can see the sales picking up and specifically in the fourth quarter of 2020. So actually for all India in the fourth quarter of 2020, residential sales have already reached pre-COVID levels. Basically, when I say pre-COVID levels, I mean the 2019 quarterly average. So in the fourth quarter of 2020, we have already reached pre-COVID levels. And the big jump, if you see from the table here, has happened because of Mumbai and Pune. And that is because of a big boost given to sales by the stamp duty cut that I spoke about. So as you can see on Q-on-Q basis for Mumbai, it jumped by 200%, for Pune by around 143%. So stamp duty cut had a big role to play in this jump back in residential sales that we have seen in 2020. With that, I come to the launches data. So launches in H1 2020 fell by around 46%, mainly because of the pandemic. And then with things moving to normalcy, we saw the launches improving by around 42%. On an annual basis, launches have fallen by 34% compared to the 2019 levels that we had seen. Now, looking at the launches data for the top 8 cities, we find the story is pretty similar. For YOY basis, if I look at it, 2020, the annual data, launches fell across cities. However, the improvements started happening from the second half of 2020 as we saw the supply bottlenecks easing in the economy, and specifically in the fourth quarter of 2020. And again, like I mentioned here, the big jump even in launches has happened in Mumbai and Pune. So stamp duty cut had a role to play even here. This slide looks at the ticket-wise split of residential sales. And as you can see from the pie chart here, the share of the segment, which is 5 million and above, their share increased to around 57% in sales compared to 51% in H2 2019. So basically, the middle and higher income segment, they have got relatively less impacted by the pandemic. And that's getting reflected in the residential sales data too. If I look at the residential prices, residential prices had been falling in the last few years across the top 8 cities, and in 2020 we saw a further fall in residential prices. This table here, the same data we have shown in a tabular form. So as you can see, in the last 1 year, in 2020, the residential prices fell in the range of around 1% to 9% across the top 8 cities. But the important thing to note is that if I look at the last 4 years, from 2016 to 2020, the fall is much bigger. It's in the range of around 10 to 15% across top 8 cities. But again, here I would like to highlight that some of the markets, like say Hyderabad, the residential prices were not impacted much even by the pandemic. And as you can see, in 2020, prices have remained stable, though in the second quarter and third quarter, we saw some dip in prices happening. Even in Bangalore, there was not much impact on the prices due to the pandemic. And for these two cities, if you look at the last 4-year change also, price movement has remained in the positive territory. So, as I said, interest rates have fallen, specifically in the pandemic year, and it is at a multi-decade low. So, with the prices falling and interest rate falling, the affordability has improved across the top 8 cities of India. So, here the table shows the affordability index across the top 8 cities. So, quick mention of how we have calculated this affordability index. So here I would like to highlight that we have revised the methodology for our calculation of affordability index, and we have also now taken interest rate into the picture. So apart from the movement in housing prices and household income, the third variable that we are looking into is what has happened to the interest rate and the impact of that on affordability. So, if I say for Mumbai, the affordability index is 61%, what it means is that an average household in Mumbai needs to spend around 61% of their income for their EMI. So, that's how this ratio has to be read. Now, with that understanding, if you look at this table, the affordability has improved across cities in the last decade, from 2011 to 2020. So for NCR, the affordability ratio has improved from around 64% to 38%. For Bangalore, from 53% in 2011 to 28% in 2020. And specifically, the improvement in affordability is very stark from 2015 to 2020. That's when we actually saw the housing prices falling, like we saw in the previous slide. Now, if I compare intercity, yes, Mumbai is the most expensive market, which was expected, but here also affordability has been improving in the last decade, and Ahmedabad turns out to be the most affordable market. Now here I would just like to emphasize that these are average numbers. So these do not take into account the variation, intercity micro market variation in prices, nor does it take into account the variation in household income. Broadly, this is an average number for the city. So to cut the long story short, the affordability across the top 8 cities is at its decadal best at this point in time. Now, looking at the unsold inventory levels, the inventory levels had been going down in the last few years, and in 2020, we saw the inventory level fall further, though by a marginal 2%. And the QTS, the quarter to sell, though the trend earlier was that QTS was falling with the inventory levels falling, we saw that in 2020 there was a marginal uptick, as you can see from the QTS data, and that's mainly because of the sales velocity going down, the average sales velocity, because of the second quarter being very poor for the residential sales. Now, just to summarize the residential story, residential segment was impacted by the COVID crisis, specifically in the second quarter. There was a very strong rebound that we saw in the third quarter and specifically in the fourth quarter because of various measures that were playing together like lower prices, low interest rate, government support, and in the fourth quarter of 2020, the residential sales reached around pre-COVID levels. Mid and high segment has performed relatively better, and affordability is at its best in this decade. So on that note, I will end our section on all India and we'll move to the Mumbai section. And we'll look closer at what has been happening in the Mumbai market. So Mumbai, again, we'll start with the office segment. So Mumbai, before we go to the data, I would like to emphasize that as a city, Mumbai was relatively more impacted by the pandemic compared to the other cities. And hence the city had more severe lockdown compared to the other cities. So even by the month of June, the office occupancy was allowed only up to 10%. And in September, office occupancy was increased to 30%. And currently, it's still at 30%. So broadly, it's much more stringent than what we have seen in other cities. The local trains, which are the lifeline of Mumbai, they are still not open to everyone, to the public. So, these factors have had a bearing on the numbers, which we'll see going forward. If I talk about the office transactions on a quarterly basis, office transactions fell by around 47% in the second quarter of 2020 as the pandemic was at its peak. In the third quarter, it has fallen further by 24%. In the fourth quarter of 2020, there was a resurgence here in Mumbai also, though it was not at the same magnitude as what we saw at the all India level. And like I mentioned, that's mainly because there's still a lot of restrictions in Mumbai market. And here the important thing to note is that when we're looking at the 2020 number for Mumbai, we are comparing it to 2019, which was again a record year for Mumbai. So as I said, it was a record year for all India transactions, and even for Mumbai, 2019 was a record year. So hence the fall that we are seeing in 2020 looks even more stark. And that was mainly because in 2019, there were some large pre-commitment deals that had happened, which had pushed up the number. If I look at the office transactions in terms of half yearly, we see that in H1 2020, office transactions fell by around 24%, and then it fell by a further 45% in H2 2020. And like I said, office transactions in MMR have been impacted by these restrictions, and corporates are broadly in this wait and watch mode. Annual transactions fell to around 6 million square feet in 2020, a fall of 38% compared to 2019. But here again, I would mention that we are comparing to 2019, which was a record year, and we had seen annual transactions of 9.7 million square feet in Mumbai market. Looking at the supply side of the story, on the quarterly basis, supply fell in the second quarter of 2020 by around 56% because of all the supply bottlenecks. And then in the subsequent quarters, we saw the office supply data improving. So in the fourth quarter of 2020, it has jumped up by around 353%, the office supply. On an annual basis, if we look at the office supply, because of the big jump that has happened in the fourth quarter of 2020, the office supply in 2020 remained broadly around the same as 2019. So it is 5.3 million square feet for 2020, a little less than 5.4 million square feet that we had seen in 2019. Here we are looking at the share of different industries in office occupancy. And as you can see from the table here, the sharp drop that happened in office transactions broadly for 2020 has done a lot of rejig to the share for these industries in H2 2020. So BFSI segment, which had a share of around 64% in H2 2019, their share fell to around 23% in H2 2020. IT, ITS, their share has shot up to around 13% in H2 2020 compared to 3% in H2 2019. The co-working segment, now this is an important thing to note. Co-working segment is seeing a very stark improvement in their share in 2020. Their share has improved to 18%. So basically, again, like I highlighted, co-working segment in the third and fourth quarter, they have seen a strong rebound, for all India and for Mumbai as people started seeing the flexibility, started valuing the flexibility offered by the co-working segment, specifically in these uncertain times. Talking about the rentals, as you can see, rentals across business districts has fallen in Mumbai. And it has fallen in the range of, as you can see from the table here, in the range of 4% to 11% across different business districts. And specifically in BKC and off BKC, where the vacancy levels are lower, the fall is relatively less. As you can see, it fell by just a marginal 4%. If I look at the transacted rent, the weighted average transacted rent for Mumbai market, it fell by around 5.6% in 2020. And that's mainly because, like I said, the rentals have fallen marginally across business districts. Now, talking about the vacancy level in the Mumbai market had been falling consistently till 2019. However, in 2020, the pandemic year, we have seen the vacancy level increase to around 19.8% from 17.5% that we had in the end of 2019. So just to now summarize the office segment in Mumbai market, office segment has got impacted by the COVID crisis. The impact here has been relatively more in this market because of the restrictions which are still there in Mumbai market, because of which the corporates, many of the corporates are in wait and watch mode. But the expectation is that as this city also moves towards normalcy and things start easing in terms of office occupancy and availability of local trains, we expect the outlook for office in the MMR market improving going forward. With that, we'll move to the MMR residential segment. So residential segment, again, the story is similar. The second quarter had got impacted by the COVID crisis, and we saw a big fall of 83% in residential sales in MMR. And then in the subsequent quarters, there has been a strong rebound in sales. So in Mumbai, the rebound in residential sales is much sharper than we saw for all India. And like I mentioned, that's mainly because of the stamp duty cut for a temporary period of time that was introduced by the Maharashtra government. So like you can see, in the fourth quarter of 2020, the residential sales jumped up by 193% in the fourth quarter of 2020. Again, if I look at the sales data in terms of half yearly, there was a fall of 31% in H1 2020 compared to H2 2019. This I am comparing on a half-yearly basis. And then in H2 2020, there has been a big jump by around 61%. If I look at the full year, residential sales have fallen by around 20%. And that was mainly because of the bad second quarter. Otherwise, the rebound in fourth quarter has been very strong for the Mumbai market. Now, to talk a little more in detail about the stamp duty cut by the Maharashtra government. So, if I look at the monthly data here, as you can see in the slide, you can see the huge impact that the stamp duty cut has had on residential sales. So the data here, the monthly data that we have looked here is basically the number of sales documents registered with the Maharashtra government. And as you can see, the bar graph here, the residential sales in the month of April-June was pretty dismal as the city was hit by the COVID crisis. And then if you see from September 2020, when the stamp duty cut was announced, then you start seeing the big rebound. On a YOY basis, we started seeing residential sales jumping by around 39%, 36%. And in the month of December, we saw a very big jump in residential sales happening. We saw December monthly at a record level, which we had not seen in the last 2 years, the monthly number that we see for 2020. And now the expectation is that while the stamp duty is going to increase by 1 percentage point from Jan, however, we are expecting the momentum to continue because the offer is still, the stamp duty cut is still valid till March 2021. So we are going to see some part of this momentum being maintained in the next few months. Now, the interesting thing to note here is that the stamp duty cut has been a big positive for home buyers, developers, and for the state government. So the graph here looks at the revenue collection by the state government from stamp duty. And as you can see, even with the stamp duty cut, so we are looking at the monthly revenue collection by the state government, and you can see it has been improving in the last few months. So basically the cut in stamp duty has been more than compensated by the jump in residential sales that we have seen. And as you can see, in December 2020, the revenue collection by the state government has jumped up very sharply. So in fact, for the whole of 2020, around 43% of the state government's revenue collection has come after the stamp duty cut. So which just signifies a big jump, big boost that the state government has received because of the stamp duty cut. Now, talking about the launches, residential launches in H1 2020 were impacted and it fell by around 35%. But with the economy unlocking and the city recovering, we saw the launches improving by around 15% in H2 2020. On an annual basis, if I look at the launches for 2020, it's still 37% lower than the level we had for 2019. And like I mentioned, it's mainly because of the very bad second quarter of 2020. In the third and fourth quarter, launches have also started improving as a lot of supply bottlenecks like labor availability, raw material availability, all these bottlenecks have started easing. Now, that was about the data. Now, just to highlight one qualitative aspect. So what we had been seeing for Mumbai market in the last few years is that the average size of apartment had been reducing. And we were expecting that with this pandemic and with the change in lifestyle that has happened in the last 1 year, people would start preferring bigger houses and would show inclination towards bigger houses. Now, we checked the data for launches, whether that's getting reflected, and we have seen some very initial signs of that in the data, though this is too early a period to predict a trend reversal. But at least if I look at the H2 2020 data, we did see that for two of the micro markets, Navi Mumbai and peripheral central suburbs, we saw that the average size of apartments have increased in terms of launches in H2 2020 compared to the previous period. But like I said, it's too early, but we'll have to see if this trend reversal is there going forward. Talking about the ticket-wise split for the Mumbai market, again, the trend here is similar to what we saw for the All India market. The middle and higher income category, their share has increased in H2 2020 compared to H2 2019. And that's, like I mentioned, that's mainly because the middle and upper income category has been relatively less impacted by this pandemic. Now here in this slide, we are looking at the Q4 sales for the different micro markets for MMR. And as you can see, the relatively more expensive markets, the high-end market of South Mumbai and Central Mumbai, they have seen very big YOY jump in residential sales. So in South Mumbai, residential sales in the fourth quarter have jumped by more than 300%. In western suburbs, in Central Mumbai, it has jumped by around 186% on a YOY basis. Now, these two markets have a relatively low base. Now, if you look at some of the other markets like Thane, which has a much higher base and which sold around some 3,000 units in Q4 2020, here also the jump is very sharp. It jumped by more than 100% YOY basis in Thane. So basically, across micro markets in the fourth quarter of 2020, we have seen a big jump in residential sales. Now, if I look at the prices in MMR has fallen in 2020 by around 3% on a YOY basis. And if you look at the trend, it is relatively muted when compared to the kind of fall in residential prices that we had seen in 2017 and 18. But yes, residential prices have fallen further in 2020, though marginally. Looking at the inventory level, the unsold inventory level in H2 2020, we saw the level falling marginally. And the QTS also fell marginally to around 10.7 quarters in H2 2020, just a little lower than around 10.8 quarters that we had in H1 2020. This slide looks at the age of inventory, and the age of inventory, if you can see in H2 2020, has fallen to around 14.6 as against 15.1 that we had in H1 2020. And that's mainly because home buyers are preferring ready to move in sales, which is getting reflected in our age of inventory. To summarize the MMR market, the residential market, there has been a very strong upsurge in residential market in Mumbai, specifically in the fourth quarter of 2020, and that's mainly because of the stamp duty cut that has happened for a temporary period of time, and we expect the sales momentum to continue for the next few months, given that the stamp duty cut will be valid till March 2021. But broadly, the expectation is that the sales momentum in Mumbai market is going to continue. So with that, I will end my presentation and we'll move to the Q&A session.
Good afternoon, ladies and gentlemen. Let me welcome you all on this launch of our annual report. And here it is. We are ready for questions and answers. I do have lots of hands raised already, but let me also tell you all that you can also punch in your questions and it'll appear on my screen, and obviously we'll have the delegate, we have Shishir and Rajni answering your questions. So to start with, I will first take a question which has come from Dhwani Pandya, and the question is, do you see residential sales momentum continuing beyond March? Now, this is a question which I think Rajni had started answering to a certain extent while she was looking at the data of Mumbai. So I would ask Rajni to continue the answer which she was, or explain what she was making a point earlier. So the question from Dhwani is, do you see residential sales momentum continuing beyond March? Over to you, Rajni.
So residential sales momentum after March, after the stamp duty cut effective period gets over, it may not continue at the same level as what we saw in the last 5-6 months, the temporary period for which we had the stamp duty cut. So from that level, the momentum may moderate. But broadly, we also have to understand that we are talking about the economy moving towards normalcy in 2021. So, even if the stamp duty cut will not be there, people going forward are going to be more comfortable and confident about their future income stream. And there are other factors favoring residential sales. Prices are at a low, interest rates are at a multi-decade low. So all these factors will still continue to support residential sales even after the March period, though the momentum may moderate a little.
Yeah, sure. So there it was, Dhwani, the answer to your question, that we are expecting the sales to continue, may not be at that rate, may not be at that monthly increase that we saw perhaps in last 2 months, November and December, but still the normal rate of increase shall continue. It was the answer that Rajni put across to you. I have a couple of hands raised. I would want to call upon Prafull Phadke. Prafulla Phadke, you have, can we unmute Prafulla, please? Can we unmute Prafull, please? Yes, Prafull, you can ask your question. Your mic is unmuted. Please go ahead and ask your question. I can't hear you. We will address that and come back to you, Praful. In the meanwhile, I have a question coming from Tanya Thomas. While Tanya had also raised hand, but she has written down her question over here. So I'll take your question, and I'm very happy to see my friend Manvendra also joining and raising the hand. Manvendra, I'll come to you, but before that, to answer the question coming from Tanya, brokers say that the increase in sales registered in Q4 are old sales being registered now because of lower stamp duties. So is the recovery in Q4 in Mumbai inflated? Well, I would want to answer that question. Well, it's possible that you may have a few of these transactions which would have been done earlier but registered in this period to take advantage of lower stamp duty. But to actually assume that the entire data of the sales or transactions that we have registered is purely the old sales happening or getting registered now would not be appropriate, because there are, while we are talking about almost 22 to 23,000 apartments sold in these 3 months, it was almost about 30,000 apartments that we registered, almost 20,000 in the month of December itself. And I have seen that data. I would not want to believe that entire registration process was purely old sales closing now. There are a lot of developers we have been interacting with, we've been talking to, and fresh sales are in a plenty. So to answer your question very simply, it is not true that all these sales that we are talking about are the old ones only getting registered now. I'm so sorry for this technical glitch. I'm told I'll have to use the microphone. And this is obviously of the questions coming in. My friend Manvendra is also in queue. Prafulla, if I can ask you to ask, please ask your question again. Prafulla, over to you. Hello? Praful, can you hear me? Hello? Okay, let me reach out to Manvendra Jha. Can we unmute Manvendra's mic, please? Yes, Manvendra, you can ask your question.
Hello, good afternoon, sir.
Hi, I can hear you loud and clear. Good. Please go ahead.
So my question is, sir, in 2020 we are 37% down from 2019 level. So what is the outlook for 2021? Will we be able to reach 2019 level or may exceed also? What is the outlook? And one thing more, in 2020, do you have any data for how much is under construction sale and how much is ready to move in?
Okay, to answer your second part of the question, do we have granular data on sales in the under construction apartment? We'll have to dig it a bit deeper. We haven't really taken that into the calculations that we have. We will give you the data separately, Manvendra. Now going to the first part of your question, where you have asked that the shrinkage from 2019 to 2020 was almost about 37%. So do we see any growth continuing in 2021, the calendar year 2021, or what is the projection? I would call upon Shishir to take that question. He's trying to understand, Manvendra's question is, the shrinkage has happened from 2019 to 2020. Now we have 2021 in front of us. Do we see the growth continuing or do we see any other trend emerging? Over to you, Shishir. In commercial, yes.
Mumbai or in?
Mumbai.
I think, Manvendra, thank you. I think if you got to consider Mumbai, you'll have to take into effect what Rajni was saying, was that Mumbai is one of the few cities which has got an extended lockdown as we speak. Even today, if you look at it, the office restrictions are imposed close to 33% is only the amount people are allowed to come in. Suburban trains are still restricted. And there are various amounts of stages of lockdown still in force. So I would assume, as what we hear pretty much today, that the vaccines will be starting to be rolled out from next week onwards. There is light at the end of the tunnel. I'm sure these restrictions will soon be lifted. And I see no reason why Mumbai would not pick up virtually immediately in 2021. Perhaps not in the first quarter, but I definitely see a pickup from the second quarter onwards as things start to improve and the lockdowns start to ease.
So Manvendra, that was Shishir trying to answer your question. Are you happy with that, or do you have anything else to ask? I think Manvendra is not on the call. So let me move on. I'll come back to Manvendra. Meanwhile, I have a lot of other questions coming in. The next question I'll pick up is from Arpika Bhosle, and she writes, what do you think will happen to the supply of the housing stock since launches are not as much as they need to be? If the demand continues post-March, will limited supply inflate the prices post-March? The question is from Arpika Bhosle, Times Property. So here it is once again, and as I can see a trend in the question itself, everybody is interested to know what the future holds for us. So once again, the question that she is asking is, the supply crunch is on the face. We are facing it last couple of months due to various reasons, whether it was labor issues or capital issues, etc. New launches have shrunk. So do we believe that there will be an impact on the sales transactions going forward, or would that also have an impact on the prices? I would call upon Rajni, you, and obviously I'll have Shishir also to give his views. Over to you, Rajni.
So I think that the supply, the bottlenecks have started easing. Labor is available now, raw material availability is there, credit availability is there. So while the supply was impacted in 2020, I see the supply also recovering in 2021. In fact, we saw that already happening in the third and fourth quarter of 2020. So I feel that if I look at 2021, the supply will come into the market, though it could be a little impacted, but there wouldn't be much impact on the supply in 2021. As far as the prices are concerned, in 2021, I feel the prices towards the end of the year, we may see some upward pressure on prices, but broadly, I see it remaining muted in 2021.
Anything special? Any special comments from Shishir? The same question.
I think it's a great question. But if you look at the unsold inventory is about 146,000 units even now. And I think the impact on increase of sales with this price value where it is would be great to lower the unsold inventory and bring it to more manageable numbers. And I look at it that I think the developers in Maharashtra have been very proactive. In fact, they matched in the stamp duty rate cut by the government of Maharashtra. And in fact, they gave the same amount, so making stamp duty virtually zero. And I think if the developers remain to be proactive, ensure prices are lucrative and are attractive, the sale momentum would perhaps continue, and we bring down the unsold inventory stock as much as we can.
Thank you so much, Shishir. Well, Manvendra has clarified. I think there is some problem, technical issue. He had to punch in his question. Thanks, Manvendra, for taking the pains of writing your question all over again. He's specifically asking about residential sales, Shishir. So his question, as he has punched in, is housing sales in 2020 fell 37% compared to 2019. What is the outlook for 2021 for all 8 cities combined? I think last we gave the answer from office perspective. If you can reply to Manvendra from residential perspective, please. Over to you, Shishir.
I think the pickup, Manvendra, if you see in quarter 4 in Mumbai and Pune was dramatic, to say the least. Now, whether it is the pent-up demand, whether it was some part of the old sales getting registered now, whatever it was. But the fundamental point was that a demand stimulus measure such as the one that we saw by the government of Maharashtra had a huge impact, increasing sales by close to 194% in Mumbai, 140, 150% odd in Pune in the last quarter. Itself was a substantial number. It just goes to the fact that if such measures are also taken by other governments, I think there should be no reason why we don't bring about this increase that we saw in these 2 cities also percolating down to the others. But having said that, I think the momentum of increase that we've seen in sales in the quarter 4 or in H2 across the country, I think will continue as the economy starts picking up, as the GDP growth will pick up, as has been said by most of the rating agencies today. I think perhaps if not 2021, 2022, definitely there will be a substantial period of growth, and within that I think the residential sector will also pick up.
Thank you, Shishir. Manvendra, you may ask any other questions if you have. And on the other side, I have a question I'll pick up from Arbind Gupta. Arbind has to ask, even as the market is showing signs of recovery, what are the challenges you foresee going ahead? Shishir, I will trouble you again with this answer because it's pretty widespread, very macro level questions he has asked. So the question is, what are the challenges that you see for real estate industry going forward?
I think coming back to again in commercial really, as normality gets back, and I think the world has changed. I think the way we work has changed substantially over this year. We still don't know. I think work from home to a large extent, perhaps in some way or the other, will remain to be a continuous phenomenon. The type of offices that we have today will definitely change, and there will be a new type of offices with social distancing and all being part of our normal way of functioning. And I think suffice to say that the office will never be the same again. What impact this will have finally on the demand and absorption of space is yet to be determined. In residential, again, as Rajni was saying in her presentation, it's too early to say today whether the demand for larger homes have gone up because of work from home and people wanting larger spaces, or has the demand for larger priced homes gone up? Because when we saw in this year, we saw the increase to be similar in both affordable as well as the more luxury and premium. But having said that, I think if you see the affordability index over a period of time, most cities have had over 4 years' time seen substantial improvement in affordability. The requirement of owning a home perhaps has been underscored or really pushed hard during the pandemic. I feel at this stage that, and if one goes by the quarter 4 numbers, I think the rebound you would definitely see this increase that is seeing pass right through H1 2021.
Thank you, Shishir. The next question is from Dhwani Pandya. There are a couple of other questions also pending. Please allow us time to answer all these questions. The question from Dhwani is, do you see investors coming back in residential market after recent momentum in sales? Now, obviously, investor angle is something which is very crucial to understand whether we're talking about institutional investors or individual investors. And since we're talking about residential, obviously there are more of individual investors. Institutional investors could be project lending and so on. But as far as individuals are concerned, it's a bit too soon to expect investors to return to pick up apartments, to buy these apartments where they would look at price rises. While we have seen enough of the data about prices falling almost about 17 to 18% in last couple of years, and that perhaps is a reason for a few of those investors to expect the lowest price, enter, and then expect the prices to shoot up. But then it's a bit too early, because especially the last couple of quarters impacted by COVID have been such that many of the investors are also scared to get into residential apartments as an investment opportunity. While on the other side, commercial investments have happened earlier, as we spoke about. Quite a few of these big institutional investors, right from Blackstones or a lot of these people have picked up huge properties earlier and have also going through the REIT route. But as far as individual investors are concerned, well, the story is not yet very clear. We have to wait. One question, something which was, Shishir, you were referring to in your last reference about the segregation of sales, and Kruti has been asking this question. Is there any sudden improvement in luxury sales, and is it really reflecting in the lower sales of affordable homes? I would want Shishir to give your view on this, please.
As I said, I think it's early days as yet, but if you see the numbers that South Mumbai and Central Mumbai had, albeit on a smaller base, the increases have been 350, 250% increases, are all higher ticket items. So, and perhaps we'll have to see what has pushed the average sale of prices up. As I said, it's a bit early days at the moment. We did get data from two of the suburbs which Rajni spoke about, which had reflected a higher space utilization. But I think for the last two 6-month periods, we've noticed that the upper end homes are doing as well as the affordable homes. In fact, over a period of time, it has been noticed that the affordable segment has perhaps not done as well as the higher than 1 crore sale price apartments have done.
Thanks, Shishir. The next question I would want Rajni to come in, because it's specifically talking about our methodologies. Arpika Bhosle is asking this question. Your revised methodology for calculation includes interest rates. There might be increase in income post-March, as mostly housing prices might remain the same largely until the end of the year, according to Rajni's previous answers. Are any other factors that you can see in the foreseeable future that might change the affordability index? Over to you, Rajni, for that. Your view on the affordability index, future of it, how do you see it moving in times to come?
So, affordability index, like I said, the three critical parameters that goes into it is what's happening to household income, what's happening to housing prices, and what's happening to interest rate. Now, if I look at the variables, interest rate, I expect it to broadly remain around the current levels. If not a dip, I don't expect an increase in interest rate happening in 2021. So interest rates are going to remain low. Housing prices, even if it doesn't fall further, we are expecting it to remain around the current levels. And the household income, we expect that to improve going forward. Like I mentioned, the GDP after the setback that the economy received in 2020, we are expecting income levels for the economy and for the households to improve in 2021. So household income is going to improve, interest rates will remain low, probably prices will remain stable. So affordability will remain attractive in 2021 also.
Thank you so much. And next question I'm taking is from Shubhra Tandon. Shubhra is asking, what is the outlook on the future of co-working space shares? Is it likely to go up from 10% like you have shared? Do you expect this to take up some of the share from the traditional office space? Shishir, I would want you to chip in on this. Specifically, focus is on co-working spaces, and we heard from Rajni's presentation that the share has increased in such tough times as well. So over to you, Shishir.
Thank you, Shubhra. I think you'll have to understand that one of the greatest anchors for co-working has been the need and requirement for flexibility by the occupiers. And I think that's the core. So while initial part of the pandemic saw a reduction in the co-working space because of the predominance of startups or small businesses maybe reducing their exposure to rentals. But post that, as work from home continued, as the issues of the lockdown continued, occupiers realized the importance of flexibility. And for flexibility to come in, its great option is for having space in a co-working location. So I think co-working will be there, but maybe the sectors within co-working might change from startups and small businesses to larger organizations and occupiers using the flexibility option to take place in co-working.
Thank you so much, Shishir. And Shubhra, I hope you have got the answer that you were seeking. I'll move on to the next question that has come from Tanya Thomas. I'm so sorry, Tanya, you had raised your hands, but then technology is not supporting and you had to punch in your question all over again. So the question that you have sent to us, Tanya, is, do you see a change in trend of commercial rentals, all India for both office and retail? Are long-term agreements being renegotiated downwards? Well, once again, Shishir, I would want you to chip in on this. This is, as I see, most of them are keen to look at or to seek the future outlook from us, whereas this report is mostly about what last year was. So, to answer most of these questions, we are going beyond the scope of our report, and hence I am asking Shishir time and again to chip in with a wider perspective, because here also she is asking about retail space as well. Over to you, Shishir.
So I'll comment mainly on the office space, but as I said, and as Ghulam was alluding, I think we'll stick to this report at the moment. If you see, a lot of people after the highs of 2019 and a phenomenal first quarter of 2020, when suddenly the pandemic came in March 2020, there was an enforced lockdown and an enforced work from home. People thought that the office market would crack, and we saw definitely a lack of utilization of office space as well as launches in quarter 2 2020. However, I think the resilience of the office sector was seen in quarter 3 and a smart return in quarter 4, which showed that as the economy started opening, as cities started opening, we were back to normal, and there was the search for office space continued on. As I earlier said, I think work from home for part of the organization may remain a permanent feature, but I think more or less people are convinced of the fact that work from office would perhaps be the better option. Where the office is the discussion today. Whether it should be work from anywhere, work from closer home, work in a distant location, in a consolidated place, or what type of workplace there will be, is a discussion that will continue for a long period of time. But I think today the office space is back in question, and people are looking for office spaces. And I think over a matter of time, in the next few quarters, you will see again demand outstripping supply. So I don't think there are too many renegotiations happening, as you said. And at this point of time, it is nearly status quo as we continue.
Thanks, Shishir. And we continue to get into more such future gazing kind of questions. Well, this question has come from Ashwini. Thank you so much, Ashwini, for asking this question. Due to the impact of COVID-19, do you see any change in the design of residential project apartments apart from increase in unit sizes? Second, do you also see a reverse migration trend because of work from home? And has there been any significant uptick in the sales of tier 2 cities? Well, let me answer this question.
Please.
As far as tier 2 cities are concerned, we, at least in this report, are not picking up that data. So that's something which I would not want to dwell deeper into. But as regards to the apartment sizes increasing, this question of apartment sizes increasing is something which is very clearly visible, especially in a place like Mumbai. I would say most of the other cities, whether it is Delhi or Bengaluru, etc., the apartment sizes did not shrink as much as we saw that happening in Mumbai over last, say, about 5 to 6 years. But that said, let's also keep one thing in mind, that whether it is residential or commercial, the whole report is talking about an upsurge in the last quarter of 2020. And that, while it will continue in the coming quarters, is not as anybody's guess. But let's look at it this way, with vaccine also almost about knocking our doors. If not next quarter, maybe next couple of quarters, we shall all be vaccinated the way things are going. If that be the case, are we expecting people to extend their future cash flows, etc., cash outflows, and commit for an apartment which is more than what they needed purely for 2 quarters of disruption that they would have gone through. Well, I think we have answered most of the questions that I had on my screen. In case if you have, I think there's some more coming in. So in case, I don't know, Opika, if you got the answer that you're seeking, Rajni just gave that answer. In case if you haven't, if you have more questions, if you want to send them across to us, please continue to send them. We are here even for one-on-one interactions with most of you or anybody of you who wants to talk to us. While, you know, something which I'm missing today is the physical interaction, which in most of these press meets we used to enjoy, but due to COVID, we are forced to do this digitally. I hope the next time when we do our next 6 monthly report launch, we shall have a physical interaction also. With vaccines around the corner, I'm sure we shall have a change the way we used to do it earlier. So whether it is technology, whether it is a lot of these related issues which are troubling us, hopefully the next report launch, we shall not face that. So with that, I think we have come to the culmination of this question answer session. And I would once again urge all of you, thank you so much. You all have come to this press conference. Would continue to seek your participation in the next report launches that we have. But for today, thank you so much. And we shall continue to be here. In case if you want any question answered, please reach out to us. Thank you so much.
Thank you.
Thank you.